Hey there, everybody. It's J Rod here with Zach Scheit for this month's State of the Market call. Zach, how are you, man?
I'm doing great, man. It's spring break week, so the kids are home, and I'm having a good time with them. This is spring, beautiful outside, and I live in Georgia. It's Masters Week, so starting tomorrow, we're going to be watching some golf. I get to hang out with my brothers. We always make a big deal of it. So life is good, man. It's a good time.
Oh yeah, you're
Things look great in the market too. The S&P just hit a new all-time high. We've got a lot of exciting things on the income side, on the growth side. There's a tremendous amount of stuff going on.
yeah, can't wait to dig in. And if you're unfamiliar, on this call, we're gonna Zach is gonna break down all the market action, cutting through the noise of what's going on in mainstream media. We've got Zach every month come in and just get right to the action. And with that, man, what do you like this month?
Well, so I want to start off with I'm a dad joke kind of a guy, and Yogi Berra always cracks me up. But there's this old Yogi Berra statement that says no one ever goes there anymore. It's way too crowded, which doesn't make any sense. But at the same time, you kind of get where he's going with that. And I think it's kind of appropriate in this market because we're seeing some areas of the market that are too crowded. And quite honestly, no one should go there right now because of the fact that it's too crowded and there's too much danger. So when we think about this, what does it mean for a market or for a particular trade to be crowded? Well, there's certain trends in the market that gather a lot of strength because everyone and their brother winds up getting invested in this particular area of the market. And I say that everyone and their brother makes sense because my brother is one of those people who he contacts me every so often and says, "Hey, I just got in Bitcoin," or "Hey, I just got in Snowflake," or "Hey, I just got in whatever the new hot trend is." And you guys out there on this call, you probably know plenty of people like that. And it's fun to be involved in the stocks that everybody else loves, and that can really drive some strong trends. But one of the things that we need to realize is that when these trends get too crowded and everybody already knows that this is the best place to be, and everybody who wants to buy has already decided to buy, they've already put their capital into that area of the market, that particular stock, that cryptocurrency, we have to at some point see that buying pressure get exhausted. And in fact, when things get ugly, everybody heads for the exits at the same time. And that brings to mind the picture of a crowded theater where somebody yells fire and all of a sudden everybody tries to hit the exits at the same time. And that's when you see some really big moves that can be dangerous in areas that are very, very popular. Just to kind of give you a little bit of perspective of how popular this stuff is. In addition to my brother, I'm getting calls and conversations with so many people. My eye doctor just the other day was talking about Snowflake as if he was a professional trader. He wasn't asking my opinion, not that he needs to, that's fine, but he was telling me exactly how to invest in the growth stocks of today, how to get involved in Snowflake and why this particular stock was his favorite and why you definitely need to buy it after this pullback. So just to give you and this is just one example of many growth stocks that have become crowded trades and dangerous, but Snowflake trades for the whole company is worth $65 billion. That's a pretty sizable company. And that's after the stock pulled back by something like 40%. Meanwhile, this company, Snowflake, it's a cloud company, and they generate just over $1.5 billion in sales every year. So $500 million in sales, $65 billion worth of value. That's what the company's worth in the market. But the company loses money every single quarter. So because it's a cloud name, it's a popular name and everybody wants to be invested in it. But when you look at the details of how this company operates and what you're buying when you buy shares of stock, it gets a little bit scary. I know they're going to grow over time and they're in a popular area, but this is the kind of thing that we're seeing. Everybody is invested in these names, and there's a lot of danger that somebody will wake up and say, hold up just a second, why are we buying this stock at $65 billion when it doesn't make any money and it doesn't have enough revenue? And if everybody starts to rush out of these popular stocks at the same time, we could see a pretty big sell-off. So I wanted to show you just a quick chart that kind of helps explain what's going on here. See if you can see this chart on my screen right now. Do you guys see the growth versus value chart coming up?
Yep, we got it here.
Okay, perfect. So this chart just shows the difference between growth stocks, which are companies that are, obviously growing their earnings or supposed to be growing their earnings, growing their revenue, and value stocks, which value stocks are companies that trade at a discount price, and they're typically reliable companies that generate profits, but the market doesn't get as excited about them during certain stages. So what we've seen is over the last few months, and specifically this spring, we've seen growth stocks trading sharply lower when compared to value stocks, which if you look at it from the other perspective, it means that value stocks have been doing much better than growth stocks. And this breakdown is likely just getting started, because what you don't see in this chart just shows over the last year, what you don't see is that growth has been outperforming value for years and years and years. And we've seen this theater getting more and more and more crowded with more and more people buying growth stocks, and prices of these stocks going to levels that don't make sense, levels that are sort of silly, levels that are just absolutely stupid compared to what the companies themselves are doing. So as this rotation breaks down and we start seeing more people buying value stocks and selling growth stocks, it really could pick up steam and really drive some big changes in the market. Now, of course, this is something that we've been talking about for a while, so hopefully that's not a surprise to you. But we're seeing that evidence already coming out, and this big picture is changing. So I may sound like an old fogey, I may sound like a seasoned trader, and not in touch with the times if you're one of those people that absolutely loves all of these growth stocks. But just remember that markets shift and trends and cycles complete themselves, and they take years to happen. But there's nothing boring about making money, as long as if you're making money in growth stocks, great. If you're making money in value stocks, great. There's nothing boring about making money regardless of where it is. You might be asking, Zach, are you saying that you need to get out of growth, that we're no longer income plus growth equals wealth? Well, that's not true at all. It's just that we're going to get the growth from different places now. So think about some of these value stocks, and to make sure that we're all on the same page, a value stock is simply a company that trades for a low price compared to the earnings or the earnings per share that company generates. So right now we're seeing a lot of really good companies trading for 8 or 10 times earnings, which is a very low price. It's sort of like being able to to buy a car at $20,000 below MSRP. It's a value, it's a discount. And that value gives you a chance to buy great companies at low prices and get great dividends from them. But think about what happens if one of these value stocks trades from, say, 10 times earnings, and then it starts trading at 15 times earnings as more capital rotates into the value stocks. Well, that gives you a 50% return from we'll call it a boring stock, but there's nothing boring about a 50% return. Plus, if we're talking about the best value stocks, these value stocks are still going to grow their earnings over time. So it'll be 15 times higher earnings. So that gives you more than 50% growth. And then if you add in the fact that these companies pay dividends, those dividends add even more to that 50%. Oh, and don't forget, you can reinvest those dividends into new shares of stock. So as you reinvest those dividends, your new shares are also growing. So it just compounds on itself. So the whole theory of growth plus income equals wealth is still in play. We're still very much looking at those type of opportunities that grow your wealth and also give you great income. It's just that in today's market, in this new season, we are going to see that growth come from different places. So we talk. Sorry?
It's time to be picky, it sounds like.
Absolutely. And yeah, and that is a really important point. And it's something that not that any of us want to brag, but it is something that'll be fun when you go into your local restaurant, or you have drinks with friends now that COVID is starting to wind down, and you're able to say, oh, you got you got hurt with those, those growth stocks trading down. I'm sorry, man. I'll pick up the tab for this dinner because my value stocks are kicking butt right now. Not that you want to brag, but it sure is great to be able to say I sidestepped that dangerous spot, and in fact, I did really well, and was able to grow my wealth, grow my retirement income during that period of time.
Any final thoughts before we wrap up this month?
I think that as you manage your investments, you really should do it from a professional level. We need to take all of the decisions that we make and think, if I was running a fund for somebody else, or if I was in charge of my best friend's investments, what would I do? And if you take that same level of care, you take that same level of risk management with your own investments, you'll do just fine. In fact, you'll make a lot of money in this particular market. So let's look at this market from a professional view, and let's grow our wealth. I'm excited about this.
It's great times. Well, Zach, thank you as always for a fantastic call. I'm J-Rod, and we'll see you next month.
See you next month, guys.